We have a couple of major Tesla stock upgrades from institutional analysts Baird and Piper. Warren Buffett sold all his stake in BYD, and news about EOS. First, for Tesla stock, these weren't just small moves, but over $100. Baird has the highest price target on Wall Street at $548. They now see Tesla as a physical AI company, not just a car maker, and says its metamorphosis will see Tesla soar to $3,000 in just 10 years. Piper Sandler defends Tesla's fiscal year 2025 PE multiple of 230x as similar to Amazon in 2012. Second, we have a new interview with Tesla chief designer Franz von Holhausen, who said he expects Robovan's ride fare to be 10 to 20 cents a mile. Franz also gave strong hints that Tesla will make cyber SUVs and smaller Cybertrucks. Third, Nvidia CEO Jensen Huang announced a letter of intent to invest $500 million to autonomous software maker Wayve. Wayve uses a similar approach to Tesla with camera vision and no LiDAR. Finally, we'll take a closer look at the demand for batteries for AI data centers and EOS. Plus, Warren Buffett's Berkshire Hathaway apparently fully exited their position on BYD early this year. Jeff Lutz with us today, the perfect person who knows a lot about these topics, especially the batteries and energy. He's a multi-decade supply chain executive and chief quality officer. He's now CEO of his own supply chain consulting firm. Welcome, Jeff.
Hey, Herbert. Yeah, I have a big smile on my face because a lot of these things are finally working. And I'm happy for these companies. I'm happy for people involved. So yeah, let's get into it.
This is a good one. Of course, we've got the institutional analyst who's predicting this. We've been saying this for a while, but Warren Buffett exiting BYD, you've been announcing that for earlier this year. You're warning that, and I guess Warren listened to you. And then you've got EOS. You've been very bullish on EOS. We'll cover what they're doing too, because energy storage is going to be, it is already booming, and it's going to be even bigger than what people realize. Okay, so we got Baird analyst Ben Kallo. He's become super bullish on Tesla. They increased their Tesla price target by 71%. From 320, it's a major jump to 548. This is now the highest Tesla stock price target on Wall Street. Used to be Dan Ives at Wedbush Securities at $500. They also upgraded Tesla to outperform. So this is a $548 stock would make Tesla a $1.82 trillion company. We underestimated the look-through in the core automotive business. Okay, we now expect shares to outperform. This is the key words, right? They're seeing as a leader in physical AI. The road ahead is chock full of catalysts. Beyond the typical Tesla news flow, we see several events ahead, which could move the stock. The next gen Optimus reveal, additional bots, by the way, not just Optimus humanoid, entering new markets for robo-taxi service, shareholder approval of Musk's pay package, launch of the Tesla Semi, rollout of more affordable vehicle, expanding the use of Dojo. I don't know what that is. The Dojo externally. Dojo has kind of like been moved over to AI 6. And energy business growth. Lastly, Musk's share purchase is a positive sign that they said that. And then this article is written about how Tesla's metamorphosis may see its stock surge to $3,000. And they're talking about Baird. Baird was thinking here. Why would they do this huge jump like this? I guess they need to catch up.
Yeah, I mean, the stock's on the move, so you're going to see more of these. And they're calling out a lot of the traits that we've talked about on your show, Herbert, and I hope these analysts are a big fan of the show. But this is what we've been talking about. You can count on one hand, and you maybe only count on one or two fingers the companies that can actually develop AI software and can manufacture products. You may be only able to count that on actually not only one hand, but right now it may be one finger. And they're seeing it too. So a lot of these analysts either own a Tesla or they have access to go test drive. Very responsible thing, by the way. If you're giving investment advice to people, you either way, by the way, right? You should understand how the system works and how, more importantly, its relative improvement over the last several months, the last year, the last 2 years. Because it looks like the rate of improvement is increasing and it's dramatic. And the markets are going to want to get ahead of these things and not be caught flat-footed. I think the markets were a bit flat-footed, if you remember Nvidia and ChatGPT, but you saw what happened after that, and it was off to the races when they saw the capability. So I think this is the first of many. I think they're both experienced in the product. They're seeing the news flow. They're seeing analysts on, whether it's on YouTube or on TV, they're appropriately talking about where Tesla is placed now. It wasn't even in the AI conversation a year ago. And now Elon arguably has the two most compelling AI assets, both with XAI and Tesla, in that you can buy in the marketplace.
Yeah. This is once Baird does it. Of course, we've always known Morgan Stanley's been very, very optimistic. Dan Ives. Now you got Baird. Now you got Piper Sandler. The rest will follow. It's interesting to see what they say, what made them make their decision. Baird, of course, was talking about Tesla being a physical AI company, but they also did their own exercise and they modeled out a time period of 10 years. And they actually, the theme is they believe Elon can accomplish these incredible, milestones that he's supposed to hit. And then they think that it's all very possible, according to what they're saying, in terms of Tesla already has 8.7 million vehicles, they think, by the end of 2025, this year. And that is a baseline, a goal, 20 million vehicles delivered. Yeah, they think they can be done. They also can reach the 10 million active full self-driving subscriptions. They say that's only 50% of the buyers of the 20 million vehicles once they get that up by the end of the year. And they think they'll hit the bots, the whole package. They should, and again, everything here is just something that they think they can do. Yeah.
This is how difficult is it? Look at Apple and look at all of their assets. Look at the amount of cash they have. Look at how that company's positioned, and they're struggling to put a physical real world AI device out there. They have a platform with over 2 billion users on it, and they're struggling. So just it gives you an idea of the scarcity. And the scarcity is you can manufacture hardware profitably, and that hardware can host AI services and capability that are meaningfully differentiated from anything else you can buy. So if you go into a dealership now and buy a vehicle, the only vehicle that's going to drive you away from that lot into your home is a Tesla. And that is that differentiation is now starting to become very, very crisp and understandable. And the value that it's the scarcity piece. You can't buy anything else that does that. And that's what markets want to get ahead of.
Yeah.
Especially if there's a big value attached to it. And the big value attached to it is reducing the total landed cost of transportation, making it more ubiquitous, available, and disrupting an existing industry and making it much larger. Because if transportation is significantly cheaper, you disrupt conventional automobile companies that make cars, you disrupt the rideshare industry, you disrupt rail, you start disrupting so many other industries, and then you create a new one with a much larger TAM that only few people have properly modeled.
And I think what's surprising is that what you just said about disrupting transportation in general is actually not being modeled yet. These guys are just modeling out what Elon's goals are, not yet what would happen if they goes beyond just ride hail, beyond just FSD subscriptions, beyond just car sales, that they were targeting. So it's just funny, and not funny, but interesting that here's Baird now saying that in 2030, the bull volume case by 2035 is $3,000, which is, again, everybody's laughing at Kathy Wood's ARK Invest $2,600 price point by 2030. Here we go. So that is them. Now the next one is Piper Sandler. Piper Sandler increased their price target to $500 from $400. So again, huge jump, $100 difference. You got to tell me why they're doing this $100 difference now. I think you kind of said that they're catching up, but here they're now, again, going after, remember the big debate we have with many institutional analysts and portfolio managers like Gary, who says PE ratio is like not, it's not affordable. Here's Piper defending Tesla's 230 P ratio. They said, take a look at Amazon's 200 times multiple from 2012. That's what they see. So they're looking at 495 third quarter deliveries, 1,000. That's a lot. Well above the Wall Street consensus 433. They might be a little bit bullish, too bullish there. And so this is their note that they put out. Lots here to cover. They're boosting their price to 500 following a trip to China. So after they met with Chinese EV makers, we can see why Elon respects these fast followers so much. Indeed, vertically integrated Chinese OEMs may be Tesla's number one competitive threat. But when it comes to real-world AI, these companies look to Tesla for guidance, not the other way around. In the words of one company, without Tesla going from 0 to 1, we can't go from 1 to 100. Bottom line, Tesla remains our top idea for investing in autonomous vehicles and robotics. We'll go through, why don't I just go through this first list here? There's a lot to cover. In China, we met with Xiaomi, Li Auto, Leap Motor, and other auto industry contacts. When it comes to building EVs, Chinese OEMs have arguably matched, maybe surpassed Tesla. Chinese EVs offer in-house electronics, rapid over-the-air updates, low prices, good range. Long-term Tesla investors should take note. There's nothing that can't be copied. But on the plus side, we think nobody's more worth copying than Tesla, building AI-enabled chips. So it's perfect timing. I mean, yes, Elon already predicted this. We'll make EVs, but everybody will make EVs. They'll catch up. Or by that point, we're going to have autonomous vehicles. And that's our next leg up. Thoughts on this section here?
The other thing, Herbert, that Tesla has that the Chinese don't have is this global market access. And you can say that they're ramping and you're seeing them all over the world. You're not going to see them in the US anytime soon. And you're seeing some barriers being put up now in Mexico. You're seeing some in Canada. And it is difficult to take their model of vehicle assembly and their supply chain. Remember, their cost structure comes from the supply chain. China deserves credit. I mean, they've built a great EV supply chain over basically a decade and a half in China, and that serves them well for their domestic market. Remember, supply chain theory is you want your source of supply in your end distribution points to be as close as possible. If they're as close as possible, you can keep the working capital low, you can keep your cash flow coming in. Everything's good. The problem that happened in China, we're going to talk a little bit about this later, is their cash flow started getting squeezed as two things were happening. One is, they have to pay their supplier, and two, we're going to talk a little bit more about it, but the price war that occurred. So the point is that model in China doesn't necessarily export itself very well. We're going to see they're having a lot of trouble building factories abroad. They're having a lot of trouble adapting to local labor standards. I think they're going to figure it out. It's going to take a period of time. It's not going to be ubiquitous. It's not going to be everywhere. And the point Elon and Tesla have made is that just making chunks of hardware is good. It's important, but now you need this other capability that's on top of it. So it goes back to the scarcity piece in the Piper note, in the Baird note. And the scarcity piece is this company Tesla has market access all over the world, and they're building AI-enabled vehicles, real-world AI, and now AI-enabled energy. And that's those two vectors. Look at the demand for energy that's going to be occurring with AI and other things, and then they have the first physical real-world AI product. You've got this scarcity issue again, and if people can only get it with this one company, even though Tesla's going to, I think, make things, they're going to license things the best they can. This creates a run on its value upwards.
It's going to run on its value upwards. So one of the themes that the Piper Sandler just said is that it's a metamorphosis to physical AI, and that Tesla is going to obviously create these things. You just talked about earlier in this call, the conversation, you were talking about how, Tesla's not only going to disrupt ride-hail, they disrupt transportation in general. And I just keep bringing it up, right? The only companies I know that's actually making robotaxi first design vehicles is Tesla and maybe Zoox, maybe a few other Chinese companies, but that's it. I've not seen others really announce this, but Franz von Holhausen, his chief designer at Tesla, was interviewed, and this is what he said. It's he thinks that the RoboVan's ride fare will cost 10 to 20 cents per mile. Now, none of us are expecting RoboVans to appear anytime soon, but he was actually in a RoboVan when he did this interview. So I don't know if those are hints or not, but 10 to 20 cents per mile, that is just absolutely ridiculous amount there. And the goal is to make it very, affordable transportation for the underprivileged. I think it's really going to revolutionize transportation. That's, one of our goals. And then he also talked about accessibility. If you look at the app, they actually have in the app, we're working on accessibility rides for now. You can access WAV is wheelchair accessible vehicles through Cap Metro and Lone Star Medical Transport. But they have Tesla's pointed out that part of robotaxi expansion eventually will have these, wheelchair accessible. That is their goal. Elon said absolutely. Thoughts on that?
Tesla, if you look at all of Elon's companies, whether it's Neuralink, Tesla, they're focusing on giving people capabilities that they wouldn't have had before. And that opens up markets, but it just helps people. It helps humanity. So if you can get the cost structure down, that helps humanity because more people have access to transportation that they didn't have before. If you get the total landed cost down of the whole system, then all of a sudden now packages they order can be delivered more inexpensively than before. So you're opening up now capabilities. But let's not pretend that Tesla is there yet. But this is the kind of system that they're building. And when it gets to scale, it could be there. And when it's there, it's going to be difficult to compete with. So, yeah. So you're talking about, if you're at Neuralink, you're talking about, people that have all kinds of debilitating diseases. They have the ability now to do things with their mind that they couldn't do before, almost superhuman. He's working on the ability to move limbs, the ability to restore vision, to restore hearing. So these are very special things. These are things that have not been imagined or for the last hundreds of years. So this is, to me, seeing what they're doing with the RoboVan is special. And the RoboVan is once they get the Cybercab working, that tech will just scale up to the RoboVan, and it's just a different form factor. Typically, with larger form factors, the engineering work, the manufacturing work, and the industrial design work, you get more degrees of freedom in all of those three areas. So I'm not saying it's going to be an easy product to make, but I think it's going to be easier to make than a Cybercab. So it's going to have more mass, it's going to have more cost and so forth, because it's going to carry more people. But in terms of the kind of problems you have to solve to get one of these to market, I think I'm not worried that the RoboVan is some leap over Cybercab. I think once they figure out Cybercab, they're figuring out the RoboVan.
I love, again, I think Elon and Tesla just think very differently. Like, while Waymo is trying to solve autonomous ride hail, and they're not really focused yet on trying to have reduced business operations costs, Tesla's trying to get to 10 to 20 cents a mile. That's ridiculous if that's what they can accomplish, because if they do, everything just absolutely changes. Their goals are just in a different atmosphere. Elon's trying to get to Mars. Everybody else is still trying to get to, a country. So here's another comment. I bet you won't agree with this, but Franz also said in the interview that the Tesla's considered making a cyber SUV or smaller Cybertruck. He said, those are definitely things we've considered. Wait and see is probably the best way I can answer that. We're working on so many innovative and fun things. So I don't know how you interpret what he said, but how do you interpret it?
I interpret as Franz has appropriately practiced how to respond to this question, because he probably gets this question, him and Lars, more than any two people in the company besides Elon, which is what's next, what's coming. And the answer is better things are coming. So they're not gonna get specific, but I could see them doing. Look, they spent a lot of CapEx on Cybertruck, so I could see them spinning up another version of that, and something that could help them, enable new functionality or capability, whether it's a 3-row SUV, and that will help get better utilization of the CapEx. If they could shrink the size of the vehicle, that may help open up, more markets. The Cybertruck is not fully globally deployed. So I think people should just, a lot of people are writing the obituary. That's fine. I think people thought the first year would have been higher. I think all of us did, but I don't think they're done. I don't think they're done scaling it. And I don't think they're done with the concept yet. So we'll see what comes next. But if you look at it on a number of different vectors, it's still, and by the way, in terms of owning one and having one, everybody that owns a Cybertruck that is reasonable, I would say, in some of they love it. They love how it drives. They love everything about it. So I could see Tesla doing another form factor in that. I wouldn't be surprised.
It makes sense. Yeah, they invested so much into this form factor, this new technology. It's not a failure, right? Because all the technology, a lot of it is what they need to do for the Cybercab and all the future vehicles. And so that's what it was. You've explained this very well before. Small volume, new products. That's where you want to test new tech.
Well, the other thing, one more thing before we leave Cybertruck, Herbert, is Tesla promised a lot of things. I think where the big miss is the lower price point and highly capable version, but they never promised, all-wheel steering, all these other things that came in later. So I think there's these puts and takes. Tesla only gets hit for the things they said they would do and they didn't do. I think this battery, the range is another thing. So I do think that there's appropriate criticism that you can have, but if you look at the thing in totality, it is an outstanding product. But if they could just figure out how to get down to the next price tier and not strip down the functionality, I think that would be its next thing. And maybe they get there by having another form factor and two to play off of. We'll see.
That makes sense. Okay, so if you're a company, what you should do is follow Tesla and the autonomous software makers that are copying Tesla, saying, "Hey, we're only going to do vision only. We're only going to do no lidar, and we're going to do neural nets and so forth." That's the one that has the most chance of succeeding. You've got a company called WayveAI, London-based. They just announced that Nvidia, Jensen Huang, is going to sign a letter of intent to give them $500 million investment. So they use a similar approach to Tesla with camera vision and no LiDAR. This is Jensen Huang here announcing this. Let's play a little bit of that.
The next $1 trillion company, you guys. All right.
Thank you, Jensen.
Hey!
Hey!
I brought your car a new brain.
Look at this. Thank you, Jensen.
Inside is our brand new Thor robotics processor.
Let's go for a drive. Can I show you?
Yeah, let's do it.
Yeah.
London is hard for human to drive.
But yeah, we're going to have an unprotected turn, which will be interesting to see. Hyde Park corner, 4 or 5 lane roundabout.
I wouldn't do it myself.
Yeah. So he showed him that. It's what you're thinking about that. Jensen Huang has been going around investing and giving away their brain. That's obviously their strategy. So the GPUs, this is the company that they should be supporting, right?
They have a shot because their solution will solve. If their solution works, the business model will work. It won't be as good as a business model as Tesla because Tesla makes their own inference and they're going to probably, who knows, they're going to spend $5,000 or more to Jensen to buy his solution. But this is one of the reasons I think Jensen's investing, because they want another horse in this race. They don't want to be overly levered to Tesla on the infrastructure side. But this, again, this would be the compute in vehicle. They don't want necessarily one horse to run away with it. And they think that there's an opportunity for them to succeed and work together. So this is good for Wave to get that investment, get that endorsement from Nvidia. So Wave has a chance if the tech works, the business model works. We don't know how well their tech works. All we see are these YouTube clips, just like we don't know it. Mm-hmm. You can't buy a Wave car right now. And that says something like it. Why can't hundreds or thousands of people buy this and use it? So we'll see where it goes. But they, unlike others that we're having the reverse of the conversation, this looks like it could have a chance on the business side. Let's see where they are in the tech. So what happens so often is everybody just gets enamored with the YouTube video and they never look at the business side. This one has a chance on the business side.
Yeah. And we don't know. They could be equivalent to FSE 11 or FSE 12. They don't have the billions of cars out there giving them the data to feed the neural net. We'll see, but it's great. This is the kind of company anyways, the story is LiDARs. As far as I'm concerned, from everything we've heard, they're no longer going to be the case. Okay, let's get to energy. It's a huge, huge, huge thing that's going on here. Scaling faces brutal realities. Data center capacity must triple by 2030. AI demand rising 33% annually. Lithium demand will outpace supply in 2025. Companies are relocating data centers due to power constraint. Infrastructure isn't ready. McKinsey analysis suggests that in mid-range scenario, demand for AI-ready data center capacity will rise at an average rate of 33% a year between 2023 and 2030. Oh my God, it's huge. And then this guy said, and yet the current administration is trying to legally block a release of debt to Lithium Americas in Nevada, so America can mine its own lithium instead of importing from China. Is that a good move by the government or bad news? Bad move by the US?
I think this is where it's important to look and understand what could be happening here. And what could be happening here, of course, we should be getting more supply, domestic supply of our own lithium. Of course we should. But we shouldn't, as a government, we shouldn't be machine gunning money out to companies that don't have the ability to convert that investment into a return and pay the government off. And that's what happened a lot. It's what happened with a lot of the EV investments actually over the last 5 years from the government is, there was a lot of money paid to Ford, GM, and Stellantis for, an equitable transition to EV in their factories, which we know that's not the best way to build a factory is to refacilitize it. The better way is to gut it and to have something brand new built for purpose to build EVs with less people, less square footage per line. So anyway, what's happening here is there's a company and a mine, Thacker Pass in Nevada, and GM is I think they bought a stake in that company, and they're expected to get a lot of their lithium from it. And part of the deal is the GM stake, but then the government side of it as well. So they're looking, I think, for a $2.3 billion investment from the government so they can capitalize and get product out of this mine and get a refining operation going. And the government's saying, well, great, show me some guarantees from GM that they're going to take what they're asking. Like they're not going to just blow another contract up, similar to some of the issues they've caused with LG on batteries. So they've caused a number of issues with announcing all these different models of vehicles, announcing that they're getting to all this capacity and then not executing and then not doing it. And so with the government, I think I can see that side of it. It's like, show me that there's some demand guarantees from GM, and then I'll give you the loan. So I think that's okay. It's appropriate. They should wrap it up. Tesla gets a lot of their lithium for North America out of Piedmont, and Piedmont, I believe, they're in the Carolinas and they're in Quebec, and the product coming out of Quebec would come in under USMCA and not be tariffed. So I think Tesla is okay in this situation. Would it be great for them to have more supply and have another viable node close to them in Nevada? Sure. But I think Tesla is okay in this situation for North America consumption. But you'd like to see this get resolved.
So AI with data centers are exploding. They're going to need batteries. You got Tesla with their megapacks, but then there's enough. You need more. And EOS and other battery makers, you're investor in some of them. You are following this very closely. They make the zinc-based batteries, long duration. And, so this was a good interview, you thought, about the EOS Energy for AI. I can play a little bit of it.
Yeah, there's a couple of good clips in it. I think the tagline that they're really running with, and they're really building their product and systems towards, is this energy for AI, which is, yes, we need all these different sources, natural gas. We need all these different sources to create energy. But once that energy is created, we need storage of electricity, so we can increase the utilization rate of the whole system and make sure it's up and viable the whole time. So their CEO was out. He was on a long form CNBC interview. I would say long form, but it was a full segment, and he went through some of these points. So we should play a couple of clips.
Think about the company. We're spending a lot of time talking about the battery and the power demands of AI. There's energy for AI, and then there's AI for energy. So when you look at what we've done, very simple product, packaged safely, non-flammable, non-toxic, fully recyclable. And we surround that with software that's designed and built in America, and we hold the data here in the United States. So that critical security for the grid is provided by our solution.
Joe Mastrangelo, EOS Energy, the ticker EOSE. It's doubled in 6 months, and it makes me happy to hear that a lot of your employees are also going to benefit from that run.
Yes.
Joe, appreciate that.
And a lot of investors on X are benefiting from that. Yeah, we've been talking about it for a bit. And a lot of the posts on X are like, well, EOS versus Tesla, or EOS versus this. The answer is the TAM is so big. I mean, first off, you should understand the technology. You should understand the comparisons. Yep. But this isn't Mortal Kombat. There's plenty of need out there for these companies to expand. But their product is greater than 91% sourced in the U.S. The first part of that clip was basically everybody was questioning them being able to set up their operation in the U.S. And they started it about 6-7 years ago. They were building in China before this, different product line. So they changed the product. They made the product more efficient, higher performance. That's called the Z3 Cube. And then they brought the operation here, mostly manual production. And since over the last 2 years, they reconverted that whole line into a fully automated line. They used a U.S. automation supplier based in Wisconsin, rebuilt the entire factory. So you have new product, mostly new leadership team, and brand new factory, and they're scaling. So they're getting their first couple of gigawatt hour of outputs. They're basically doubling every quarter this year. And so they're going to have some fairly significant growth. And now what you have out there is you have this smattering of these demand needs. And it's not only AI, by the way, there's just our overall electricity needs are growing dramatically, and having batteries inside of that loop helps improve the efficiency of the entire system. So Tesla's way out in terms of this shorter duration storage, significant capacity in the US, significant global capacity. EOS here is ramping up with a solution that can be more vertically stacked. It's not flammable. It's got great return efficiency. They've now released their own operating system so that you can get more out of that system. You can control it, reconfigure it, and have it. There's a lot of machine learning AI involved in their software and their user interface. So this is now not only just a company making battery hardware, but they're making the intelligence, the battery software, all the data stored here. So I see military applications, I see AI applications, I see AI applications in military that need battery storage, that need the US sourcing. This is the other big thing of it. Greater than 91%, going to 100% US sourcing here soon. So yeah, it's a great thing to look at. It's a great thing for our country as well to be more energy independent, especially on the battery side, given what's China's dominance over the last decade.
Okay. Thank you, Jeff. Yeah, but your knowledge on batteries is unbelievable. Appreciate you updating us. There's a tremendous need for all of this. One of the reasons why Warren Buffett, Berkshire Hathaway, invested in BYD was because I think batteries, and of course, the first, one of the first movers, or not first mover, but they're entering into electric vehicles. But few people realize, except you knew this, that Tesla, or Warren Buffett actually sold his entire stake in BYD, and they did this, the first half of this year, right? And so they just now reported it.
March.
That's the case. They did in March. So, it was only now that they reported that they actually fully exited their stake, ending a 17-year investment that began in 2008. Yeah, I guess they were first movers in electric vehicles.
Funny
So
story
this
is I was doing business with BYD in the smartphone world and visiting them. And one of my visits, I meeting with the leadership team, and the schedule had to be moved around because the Berkshire Hathaway team was in town. And I had some funny comments about it at the time, but this all kind of happened and played out real time. But anyway, just a funny story. We've talked about BYD a number of times, and there's a number of good things that they've done. They've really helped get China EV volume and get the market really. So they're starting to do this global expansion. So there are a number of things that they do well, but the thing that really was difficult to explain and difficult to understand and concerned me, which was their working capital and what they're doing. And I got all these responses from people of, oh, you don't get it. This is how it happens in China. I'm like, oh, really? I don't get it. I've done billions of dollars of business in China, including having a supply chain team in China with Lenovo. Yeah. So I think I do understand it. Anyway, we'll see what happens. There's two parts to this story. One part of this is, so they sold in the March quarter, which could have been January, February, March. Berkshire Hathaway sold. There's just no investigative reporting. The 13F would have had to have come out, I think, within 45 days after. So maybe May 15th. We're sitting here in September, several months, 6 months or more later, maybe 9 months from the time they sold, and now we're hearing about it. So it just and how many Tesla killer articles were published and fabricated over that time period. Meanwhile, the largest investors are fleeing and running from the stock. That would have been the story, and it should have been, just as they make it a headline anytime they're trying to say it's a Tesla killer in BYD. That should have been a headline in May when this happened and the 13F was released, or at some point this summer for sure. To be finding out about it now is almost it's strange. It feels and sounds strange. But then the other thing that's happening here is they could use this opportunity and they could get fit. They could figure out what they have to do with their factories, with their working capital, with the span of their supply chain, how many suppliers they have, how much finished goods inventory they have. They could figure this out. It's possible. But my point a year ago, I think I brought this up in November. Yeah. My point was, this is odd. This is not good to be extending. Since 2021, they were extending payment terms year on year. It wasn't the gross number. It was the trend moving higher and higher. And then it turned into being the gross number. And then you saw this summer where the Chinese Communist Party basically said, hey, look, auto industry, too many players, the price wars are getting out of hand. And what they're actually really worried about, they're not worried about if a couple OEMs start up something and they fold. They're worrying about these ancillary effects on the supply base and the tier ones, the tier twos. And if they start folding, if the dealer networks start folding, then you could create a real estate equivalent of a real estate crisis. You could create it in the automobile industry. So that's why you see them clamping down, and they're off sides. They're paying suppliers 150, 200, 250 days. And the government's like, no, you have to get this down to something, well below 100. I think they're trying for somewhere in the 65 to 75 day range. And that is a dramatic change on your operation, your working capital. It changes. The math probably didn't work for a number of their products. So too many models, too much finished goods inventory, not paying suppliers fast enough, too many dollars in the chain. They've got to clean this thing up and get fit, or I think more problems are coming.
Yeah. That's why people need to watch this show and watch you specifically, because you were warning about BYD last year. And then you started noticing, little signals that turned out to be really big signals. But you follow these things on supply chain and so forth. And at that time, everybody was saying BYD is killing it. They're so much better than Tesla. Now we find out that things are house of cards, but neither of us are saying that they're dead or anything, that the government will support them. They're too big to fail. But it says it's important to follow the signal of what's actually happening, good or bad, for a company. And you get it first here from Jeff. You seem to be very aware of something that's happening, and you say it before others do. Now we're watching the accounting, we're watching the supply chain, we're watching these things. Yeah.
You know what, Herbert? The same thing applies to the discussion we were having before this segment on EOS. I'm actually following that company, and their moves in capacity to me is informing where this thing is going. And if you can follow the capacity, you can understand why they're adding capacity, how they're doing it, how efficient they are with working capital and capacity. You could understand potentially, if other things work, what happens in the future if you understand the way what they're doing in their supply chain. So that's one reason I've been following EOS the way I have, and have been very, I've been very supportive of what they're doing, and it looks like the market's starting to respond to it. So we'll see.
Thank you so much, Jeff. Follow Jeff. He's Signal at the Jeff Lutz on X. Thanks, everybody. Bye-bye.
Thanks. Go Bears.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.